Well, good morning, everyone. Once again, this is Ryan Griffiths with Entrust, and I thank you all for attending. We have a decent crowd today. I'll go over some processes for submitting questions as we go through the presentation, but it looks like everybody that signed up is now here, so we'll move forward with our presentation. A little bit about myself. I've been with Entrust for 11 years. The last 7 years I've been here in one of our corporate offices in Northern Nevada, which is now our precious metal division. I oversee the day-to-day operations of this division. So any questions regarding precious metals, rules and regulations regarding that asset class, feel free to bring it up in today's presentation. As you will see on our disclaimer page, all of our webinars are strictly for educational purposes. As a passive administrator, Entrust does not sell or promote any specific investments or methods of purchasing those assets. We will do our best to educate you on what the rules and regulations are per IRS code, and based on our industry experience, to do our best to make sure that you understand who the parties are and what roles they play. Once again, before you make any financial investments, it's always in your best interest to speak to either your attorney, accountant, or financial advisor to get a better understanding of what the asset class is and how it works. But obviously today's presentation we will be discussing the concept of holding physical metal inside of an IRA. A little bit about Entrust. We've been in business for over 30 years. We are an IRA administrator for alternative assets that are held inside of an IRA. We process on average anywhere from 12 to 16,000 transactions a month. We now have offices throughout the country. And as you can see, we do pride ourselves on being knowledgeable and providing education to not only individuals but anybody interested in learning about the concept of what you can and cannot do inside of an IRA. So today, in today's presentation, of course, we are going to focus on the ability and rules around buying physical metal inside of an IRA. We're not talking about ETFs or mutual funds backed by metal stocks or mining companies. This is the ability to buy actual coins or bars inside of an IRA. So we'll discuss the IRS regulations that oversee that type of asset class. We'll, of course, also discuss the different parties involved as to who you buy the metal from, where those metals are stored, and, of course, the role that Entrust plays in this process. After that, we'll go through the process of setting up an account and actually placing an order. Once again, that will involve the parties that you'll be placing your orders through and the storage facility where the assets are stored. Time pending, of course, we'll also discuss some of the historical benefits of holding physical metal, and, of course, Q&A. In terms of Q&A, you will see down in the bottom there is a little chat box that you are welcome to submit any questions throughout the presentation. If you submit a question and I just kind of look over it or don't address it, it's only because we will address that later in the presentation. But I will stop after each of these 4 sections to address any questions that anyone may have. All right, so getting started. With the IRS guidelines, obviously this is probably one of the most important concepts that we'll discuss today. What are the rules that govern the ability to hold physical metal inside of an IRA? And you'll see that there's a chairman making a notice right now. If you're having trouble hearing me for any reasons, you can always call in. This is also being recorded, and I can tell from the recording that the volume is fine for the recording that will be placed on our website. But if you're having trouble hearing us, you're also welcome to call in. In terms of IRS guidelines, as you probably know, if you've done any due diligence on IRAs and the allowable assets, the IRS does a very good job of letting us know in the tax code which assets are not allowed or which are viewed as disqualified assets. And up until 1997, for the most part, as you can see under Code 408M, that collectibles are disqualified assets. And under collectibles, they outline metals, gems, stamps, and coins. So historically, these assets were viewed as collectibles because the market value of the assets are sometimes harder to distinguish, especially if it's a rare coin or some type of collectible coin. Now, with that said, the IRS also will let us know if there's any exceptions to these rules. And in 408M, since IRAs were put into law, the ability to hold certain coins have been allowed under an exception. And in this case, it's the American Eagle. And if you look at the tax code, it outlines gold, silver, and platinum American Eagles can be held and have always been able to be held inside of an IRA. But really, it was in 1997 when the tax code was, well, I should say an additional exception was added to the tax code that allowed more metal products to be held inside of an IRA. And the tax code exception basically states that any gold, silver, platinum, or palladium bullion that meets the fineness requirement and is also stored in the possession of a trustee described under Section A, and we'll get to that on the next slide. So really there's two qualifiers that have been put in to add physical metal as an exception to the collectible rule. The metal has to meet a purity level, which we'll discuss on the next slide, and the metal also has to be in the possession of a qualified trustee or custodian of the account. So that first section of the two qualifiers talks about the purity level. And off to the right, you'll see what those purity levels are. So for gold, silver, platinum, and palladium, the bullion, whether it's in coin or bar form, has to meet this purity level to be viewed as an acceptable IRA asset. Some of the popular coins that would meet this requirement, of course the American Eagle does because it was already allowed in the tax code, but some of the additional ones are the American Buffalo, Australian Kangaroo, Austrian Philharmonic, Canadian Maple Leaf, and now even the Britannia, the English Britannia, also meets the purity level. So all those coins would qualify as an IRA investment because they meet the purity level. And some of the bars that qualify, if it's produced by a refiner or manufacturer that is NYMEX, COMEX, ISO approved, or any type of national government mint, it has to be from one of those refiners that verifies the purity of the actual bar. So any bar or round or coin that meets the purity level is acceptable as long as it meets the second qualifier. The second qualifier, of course, is the fact that the physical metal that is owned by your retirement plan has to be stored under custodial control, just like any other asset within your IRA. Once you take possession of those assets, and you certainly can at any time, it's going to be viewed as a taxable distribution. It's being removed from the retirement plan into your own personal possession. Therefore, it's going to be viewed as a distribution. But if you want to diversify your existing IRA or diversify your retirement portfolio into physical metal, you certainly can do so. Once again, the qualifiers are that it has to meet a purity level and it has to be stored in the possession of the custodian. And as you can see on this slide, who qualifies as a custodian to store these metals per the tax code? It's any bank, credit union, or state chartered trust company is basically what outlines here. So banks, credit unions, and state chartered trust companies can act as the custodian or trustee of these type of retirement plans. Any other type of entity, whether that's an LLC, whether that's a private company that is actually storing the IRA-owned metal on your behalf, you may need to look into the tax code to make sure you're not storing it in a location that doesn't meet tax code. Any questions on the IRS rules before we get into the different parties that are involved for a physical metal IRA? There's a few coming in for questions later, but we'll get to those in a minute. But if you have any questions about IRS regulations or rules, feel free to put those in the chat box, and we'll address those towards the end of the presentation. Moving on, understanding the different parties that are involved with a physical metal IRA is very important, because there's actually going to be 3 different parties involved. And it's important to do your due diligence on each of these parties, understand what role they play, what fees they may be charging. It's just good practice to understand who these parties are. The 3 parties, of course, would be the IRA custodian and or administrator. In this case, that is the role Entrust will be playing. Our main role is to facilitate the transactions on behalf of your IRA per your request. So we'll oversee the actual flow of funds from the IRA to the dealer of your choice, the tracking of the metal from the dealer to the vault location of your choice, and then, of course, the ongoing administration of the IRA, any contributions, distributions, additional purchases. We will handle all the back office required record keeping for this retirement plan. The second party involved is going to be the precious metal dealer from whom you are buying the product from. Once again, we discussed which type of products can be held inside of an IRA, but ultimately it's going to be your choice as the IRA holder as to who you buy that product from, whether that's a local coin shop, whether that's a large retail dealer, or whether it's an online trading platform. That's completely up to you as to who you buy your metal from. The same can be said as to who you are going to be storing these assets with. Entrust, we have custodial relationships with multiple, actually 8 different facilities now that you can store your metal in. These are segregated vaulting facilities where your assets are held outside of anybody else that may be storing at that facility. But ultimately, it is your responsibility to let us know prior to the funding of your purchase where you want these assets to be stored. If you're looking, and we'll talk about it shortly, but if you wanted to see the different facilities that we offer or have relationships with, you can do so on our website. On our website, we have all 8 facilities listed along with an election form. When you choose the depository that you're going to be storing with, you'll have to print that election form out, review the terms and conditions. It'll outline where the facility is, what the storage fees are for the different types of storage that they offer, and then you would need to submit that to Entrust as the election of that facility. So once again, the 3 parties involved are the IRA administrator and or custodian, the precious metal dealer from whom you are buying the product from, and the depository that is going to be storing your assets for safekeeping and insurance purposes. I put this slide up only to let you know that within an Entrust IRA, there are multiple ways that you can purchase physical metal. We'll talk about those briefly, but today's presentation for the most part is going to be on the top section, which is the conventional domestic option. This is the option where you will be placing an order through a dealer of your choice. Once again, that could be a local coin shop, it could be a large retail dealer or a wholesaler. That's completely up to you. You would place the order with that dealer. We would then track the delivery to your vaulting facility, confirm the delivery that it is what you ordered matches the invoice, is what has now been posted to your vaulting facility, and provide the ongoing administration. So we'll get into more detail about this top one, as that is what today's presentation is on. But I also wanted to mention that there's 2 other ways you can own physical metal inside of an IRA. We do have an international option, which would allow you to buy the metal through an international dealer and store it in one of 5 offshore locations. We also have partnered up with a number of dealers that have created an online trading platform. I look at this in the same way that I look at stocks and bonds back in the late 80s when the first brokerage account came on that was an online trading platform. It would actually allow you to buy physical gold coins or bars through a network and then have those delivered to a vaulting facility, but it's all done online where you'll be able to place trades at your own will. We'll have another presentation on that process, but just wanted to let you know that there's actually 3 different ways you can go about buying and storing your physical metal through an Entrust IRA. The next slide is kind of a quick outline of the fees to consider. This is just kind of a, once again, as you're doing your due diligence, to kind of get a feel for the different parties that are involved and what fees you may be paying towards them. In this case, the IRA administrator or custodian, being Entrust, we charge a flat annual administration fee of $150 per year. We do not have any setup fees, nor do we have any transaction fees. So the $150 a year is an all-inclusive fee. You can place trades as often as you like. You can take physical delivery of your metals via distribution as often as you like. Outside of any hard shipping costs to have the metal shipped to your home address, there are no additional transaction fees. As for the precious metal dealer, each dealer is going to be a little bit different, so make sure you do your own due diligence when you're looking to place an order with a dealer of your choice. Certain dealers specialize in certain products or have different platforms. So the dealer's commission will typically be built into the purchase price, and you can usually tell that by either comparing it to other dealers for the same product or more realistically looking at what the spot price of a particular metal is against what they're selling the bar for. That usually has their cost built into it as well. The last piece of the puzzle, of course, is the depository, and that is where you're going to be storing your assets for safekeeping. The fees for storage, once again, will vary depending on which facility you're housing your assets with, but typically you're looking at anywhere from $95 a year up to $160 a year, depending on the facility that you're storing with. So that's kind of an overview of the parties involved. We're going to touch on those parties as we go through the process, but understanding who the parties are and what role they play will help make this understanding of the 5 easy steps of getting set up and funded and purchased of your assets. It'll help you understand it from a concept conceptually because you now know who those parties are. So a quick overview of the process of getting your IRA set up with the ability to purchase physical metal, and we'll go into these in detail on the next few slides. But the simple steps are to first, step one would be to contact Entrust to either establish the account online, or we can provide you with one of our starter kits to establish the new IRA with Entrust. The second step is going to be to fund this new account, and we'll talk about this on the next slide, of the different methods of funding or moving funds from an existing IRA over to your new Entrust Precious Metal IRA. Once your account is set up and funded, it's now back on you, once again, to choose the dealer and the depository. So you will be choosing who you're going to be buying the product from, what product you're going to be buying, and of course where you want those to ultimately be stored for safekeeping. Once you've made that determination, step 4 will be to simply place the order through a dealer of your choice. And step 5 is to submit that order confirmation or invoice along with a buy authorization or buy direction letter to Entrust, which authorizes us to fund that transaction for you. So that's just a quick overview. We'll go into these steps in more detail. But as you're going through, feel free to ask any questions on this process or anything that we've covered so far. Step 1, in more detail, is to open the IRA with Entrust. We do administer all 4 of the main types of IRAs, being traditional, Roth, simple, or SEP. Any of those IRAs can be established to hold physical metal. We also administer health savings accounts as well as educational savings accounts. Those 2 are also custodial type of accounts, for obviously for saving towards health costs as well as educational costs. The main book of business that we administer, of course, is retirement plans, more specifically traditional and Roth IRAs. Once your account has been established, funding your account and understanding how to fund the account will probably help you understand more conceptually of what we're referring to here. So once your account is set up, and say you established a traditional IRA, you will fund your account. And there's really only 3 ways you can fund an IRA. You can transfer funds from any existing IRAs that you may have, whether that's at a brokerage house or a local bank. You can transfer funds from that IRA to the new Entrust IRA, and that is viewed as an IRA to IRA transfer. You can transfer funds between IRAs as often as you like without taxation or penalty. It's simply a movement between the 2 banks on behalf of your retirement plan. The second way to fund an IRA is through a rollover from a previous employer plan. If you had a 401k or 403b from a previous employer, once you sever employment with that firm, you have the ability to roll those funds over to an IRA, which is an individual retirement account. Most financial advisors, and feel free to speak to yours, will probably recommend that you do that. And the main reason for moving funds from an employer plan into an IRA is that an IRA has a much wider scope of investment choices for you to choose from. Everything from a brokerage account to real estate in Florida to physical precious metals, just a wider scope of allowable investments under an IRA. The third way, of course, that you can fund your account is through an annual contribution. Each of these IRAs, for the most part, have different contribution limits as they serve different purposes. With a traditional and Roth IRA, depending on your age, you can put away up to $5,500. And if you're over the age of over the age of 50, you can put away an extra $1,000, so you can put away $6,500 as a contribution to the account, and then utilize those funds to diversify into physical metal or any other type of asset that you want to invest in with your retirement plan. So step 1, of course, is establishing the account. Step 2 is funding your account. Step 3, once again, is going to be choosing your dealer and your depository. A couple things to keep in mind when you're doing your due diligence on these different companies or facilities. With a precious metal dealer, you'll want to understand what type of products they specialize in, because if you're looking for a 100-ounce silver bar, chances are there's certain dealers that specialize in those type of assets, and you would be able to get a better price for yourself in terms of commission. So shopping around and comparing commissions, whether or not the dealer will be charging you a shipping cost to ship the metal to your vaulting facility, or whether that's included in the purchase price, are just a few things to consider when you're shopping around for a precious metal dealer. As for choosing a depository, for the most part, from a safekeeping and insurance standpoint, we require the same for each of these facilities. So from a safekeeping standpoint, I don't know that there's a huge difference in the facilities, but it's always best to do your own due diligence. The main difference that we see, of course, is the fees that the depository will charge you for the safekeeping of those assets, as well as the location of the facility. Some clients prefer to be more off the beaten path in, say, North Dakota or Idaho, whereas some would choose to be in either Los Angeles or New York, where we also have facilities for storing. So understanding the fees that you're going to pay and the location of these depositories are two of the bigger things to consider when you're doing your own due diligence. So now that the account is set up and funded and you've chosen your dealer, the next step is for you to simply place the order through the dealer of your choice. In most cases, because Entrust, we have a same-day funding policy. Most of the dealers in this country will take your order right over the phone because they know that after you submit the invoice to us, Entrust is going to release those funds to cover the order, and the dealer is not going to be sitting waiting on funds. So for the most part, when you're placing an order through a dealer, you're going to be able to lock in your price right over the phone with the dealer. You'll be able to lock in the current price depending on the product, whether it's at 9 o'clock in the morning or 3 o'clock in the afternoon. You'll be able to do that over the phone with them. What the dealer is going to do in most cases, prior to locking in that order or even prior to you calling, they may either request a current copy of your Entrust statement to verify that you have sufficient funds to cover the order, or in some of the larger relationships that we have, they will submit a back office request via email that they'll CC you on, just wanting to verify the availability of these funds so that they can lock this order in for you. Once they lock the order in, they're going to generate an invoice, which they are going to send to both you and to Entrust for funding. Once Entrust receives that order, we'll verify with you either via a bidirection letter, or we'll send you a bidirection letter confirming that you are authorizing us to release funds to this dealer to cover this invoice. So that's basically how the purchasing process works. You'll call your dealer, you'll place an order over the phone, they'll trigger an invoice to both you and to Entrust. Entrust will verify the order with you, and then step 5, Entrust will release the funds to your dealer. As previously mentioned, we have a same-day funding policy. So if you called up your dealer here on the West Coast, it's 10/25. If you called your dealer, placed an order, they submitted an invoice to us before 1 o'clock today, that wire would be submitted to the dealer same day. Worst case scenario, if the order comes in after 1 o'clock Pacific Standard, we will go ahead and release the wire first thing the following morning. As soon as the wire is triggered to the dealer, it will automatically trigger a wire confirmation email to both you and the dealer, confirming that the funds have been released and should be hitting their account shortly. In that email, we also provide them with shipping instructions to your vault of your choice. In most cases, the dealer is already aware of where you're going to store. They'll probably ask you that before they lock in an order. But if they don't worry about it, because Entrust will provide them with that information as part of that wire confirmation email. So the dealer is going to receive the wire along with shipping instructions to the vault of your choice. On our system, we will track that initial release of funds as an escrow asset, showing that we've released those funds to the dealer into their escrow account. We will track that delivery until the metal arrives at your vaulting facility. As soon as it arrives, each day we receive a daily report from each of the facilities of which product has arrived for which clients. We will then compare that against your invoice to let you know that if anything's missing or if there's any discrepancies, we'll reach out to you or the dealer. But either way, you will also receive that confirmation on the day that your metal is posted to your vaulting account. It will give you a detailed inventory list of what the product is. If it's a coin, it will let you know the year of the coin and the make of the coin. If it's a bar or a round, it will let you know the refiner of the bar. So it is a segregated tracking system. You will always get back the same type of bar or coin that you purchased, and all that will be provided to you when it is posted to the account. And then, of course, you have the ability to log into your Entrust account 24/7 to see your current holdings and to see the current market values of those holdings. The values of metal are updated on a daily basis, so you can log in at any time throughout the week or at any point and see what the current value of those holdings are. So that's a quick overview of the ability to, or the process of buying the physical metal. Some of the more popular questions that come up outside of the purchasing process are how do I sell the metal and how do I take possession of the coins or bars when I want or when I'm ready to. Both of those are very good questions. From a selling standpoint, so assuming that your IRA now, you have an Entrust account, you're storing at one of the depositories, and say you have 15 American Gold Eagles, and you wanted to sell 2 of those Eagles back to get into a cash position to be able to, say, take a cash distribution. Placing an order is almost the reverse of the purchase. You will contact a dealer of your choice, as long as it's an unrelated third party that you're selling the product to. It doesn't matter whether that's a local coin shop or a large retail dealer. It will be up to you as to who you want to sell your coins to. Same process. More than likely, the dealer is going to ask you either for a current Entrust statement showing the assets that are available, or they may even reach out to Entrust to verify that we are indeed holding these on behalf of your IRA and that you have them eligible for selling. So once again, we usually will have to verify that the funds are, or the assets are available, but the dealer once again will take your order right over the phone to lock in a current price based on the product and the current spot price of that product. Once you've placed that order, they will once again send us an invoice outlining the number of coins being sold and for what price. Entrust will request a sell direction authorization from you, just for you to verify that you do indeed want to sell these coins to this individual for this amount. We will then release the metal from your vaulting facility and send it to the dealer. A couple things to keep in mind here when you're selling metal, not advising in any way, shape, or form, but it's something to keep in mind. When you're selling product back to a dealer, it may be in your best interest to find a dealer that you are comfortable with who also stores at the same facility you're storing at. This will save you on shipping cost, because ultimately if you're storing in Delaware and you want to sell to a dealer in Texas, it will be your responsibility to cover the shipping costs from Delaware down to Texas. Whereas if there's a large retail or wholesaler who stores at the same facility you do, you would still be able to sell the product to them. You just wouldn't have to cover the shipping. We would release the metals to the facility. The facility would then deposit it into the other vaulting account. So that's just a quick overview of the sell process. Taking possession of your coins or bars is a very common question we receive, and you certainly can take possession of your assets within an IRA at any point in time. You can take it in cash form, or you can actually take the assets in kind. In terms of taking the assets in kind, keep in mind that this is going to be viewed as a taxable distribution. If it's a Roth IRA, it's a distribution. It just may not be taxable. But you can take possession of any IRA-owned assets in kind. You would simply fill out an Entrust distribution request form and submit that to us. We will then verify with you, and we will release those metals to your legal address that's been verified when establishing the account. So we'll ship those metals to your home address. You will then also receive a 1099-R at the end of the year for the taxable amount. In terms of reporting purposes, as with all of our assets, everything is carried at the melt or spot value of the particular metal. So if you request a distribution today, whatever today's spot price is for gold is what will be reported on your 1099 for tax purposes. So if you took out 2 1-ounce rounds of gold and the market value today, or the spot value, is $1,200 an ounce, you would receive a 1099 for the $2,400 distribution from the IRA. But you would not have to sell the coins. We can ship the coins to your home address. Just keep in mind that you will once again be responsible for any shipping costs, and you can determine which shipping method you want us to send those to you. And we can get a quote on the different shipping costs from the different facilities prior to you selecting one. Just a couple things on Entrust. Obviously, as I mentioned, we've been in business since 1981 administering these type of IRAs, specifically alternative assets, everything from real estate to privately held notes to physical precious metals. When it came to precious metals, about 3 years ago, or it's probably been more than that now, 3 or 4 years now, as more people started to learn about the ability of holding physical metal as a way to diversify their retirement portfolio, we saw that there was going to be a demand for this. And because of the different parties involved, being the depository, being the dealers, we felt it was important to have a dedicated team that just handled precious metal transactions. And that's what our office here in Northern Nevada does. We are the dedicated precious metal center. Our staff here only deals with precious metal clients, so we're all very knowledgeable on this process. We can answer any questions you have about what's allowed or Just keep in mind that we cannot give any type of legal or financial advice. So if you call us and ask us if it's better to buy a 100-ounce silver bar as opposed to a monster box of silver coins, we can't recommend one or the other. We can just let you know, per the tax code, which ones can be held. As for our dedicated precious metal team, it allows us to have our same-day funding policy, which really gives us a competitive edge in our industry. A lot of times with dealers waiting on orders for a certain number of days puts them at risk, it puts them at market risk, because they're waiting for the funds to come in to actually lock in the order or execute the order in some cases. So we felt it was important to streamline this process and to keep everything on a same-day funding policy. This way, the dealer's not at risk, you're not at risk, everything transpires the same day that you initiate the request. We also track and review all incoming dealers that are shipping metal to the vaulting facilities. We will track that. We keep a 3, 5, and 8-day tag on those, so we're always in constant contact of any orders that have been outstanding for a certain number of days. You will be CC'd on those emails as we request an update from the dealer. So we'll keep on top of these orders, and you also can stay on top of them as well, because via your online access, when we initiate the purchase through the dealer of your choice, it will show up as an escrow asset. It won't show the actual coins that you purchased because Entrust is not yet in possession of those. As we track the delivery, in some cases if you ordered 15 gold eagles and 10 silver eagles, they may be coming from 2 different wholesalers. We will track those, and you will see the different deposits posted to your vaulting facility, and we'll keep the escrow asset on our books until everything that was supposed to be received has been received, and you will have access, of course, online to track that as well. One of the other advantages that we have in our industry is we've opted to go to an all-inclusive flat fee. We do not charge any setup fees, but more importantly, we do not charge transaction fees. So as you're placing orders throughout the life of your account, you're not going to get dinged for a $40 or $50 transaction fee on each purchase. It's just an all-inclusive fee of $150 a year, regardless of the number of transactions that you place and regardless of the value of the account. Our work is going to be the same. We'll simply oversee the record-keeping side of the IRA for you. Now we're going to take a few minutes. We have about 10 or 15 more minutes. We're just going to kind of touch on some of the historical purposes or historical reasons behind holding physical metal. And any questions you have about our process, we'll recap it at the end. And as they come in, it looks like some of these are going to be addressed here shortly. So looking at some of the potential benefits of holding physical metal, historically, the number one reason, and you probably see it in articles, newspapers, news, whatever it may be, is a preservation of wealth. And even when I speak to clients, and this is just my personal opinion because once again we don't provide financial advice, I personally do not see gold or silver as an investment. It's really a preservation of wealth, and it really protects you against a devalued currency or hyperinflation or inflation. So it's really, in terms of a diversified portfolio, it's meant to act as an insurance policy, if you will, or a hedge against your other assets that may be linked to paper assets or equities. Holding physical metal historically has preserved its wealth. Most fiat currencies tend to struggle from time to time, whereas gold historically has been used to preserve wealth. Some of the other things to keep in mind when considering holding physical metal are the opportunity costs. If you're using gold as your cash position or your safety position, what would be your other alternatives to holding gold? In most cases, you're looking at money market accounts or savings accounts. And with interest rates hovering at zero or real interest rates hovering at zero or in some cases negative interest rates, the cost of holding gold is historically low. If you're opting to put 10% of your holdings into a cash or gold position and you put it into a CD that earns 0.5% or gold, that's what we're referring to when it comes to opportunity cost. The other reason that we see a lot of people moving towards gold at certain times has to do with geopolitical uncertainty. Gold is referred to as a crisis commodity. When there's global issues that pop up throughout our global economy nowadays, you tend to see gold prices moving up with that uncertainty. So on that first topic, inflation, of course, a lot of people have asked or are considering what's going on in our country in terms of inflation, and is there concern. One of the best things that I tend to focus on is the money supply. In theory, most economists will tell you that as the money supply of a certain currency increases, in theory, the value of that currency should decrease because there's more of the money in circulation. And looking at this chart, you can see it goes back to basically the 1980s. Historically, the amount of money that has been in circulation in terms of the U.S. dollar has been somewhat constant, but as things ramped up in the early 2000s and obviously in 2008, the money supply in our country shot up. Most of that had to do with quantitative easing, but for the most part, the Federal Reserve has been increasing our money supply. The problem with that is if things turn around and as the economy gets better and grows, if you're not able to pull that currency off the table, you are likely going to face inflation. We haven't reached that point of a turnaround yet to see if this inflation is going to be real, but looking at this chart, you can see there's been a significant increase in our money supply. Therefore, it may make sense to protect yourself against any possible inflationary and cost of living situations that may come up. Because once again, if you own gold and gold appreciates in value, it basically means that the dollar is lost a little bit of value. Therefore, your buying or your purchasing power may have depreciated. So your gold may go up, but so does the gas at the gas station or the price of milk. So once again, it's a way to preserve wealth. It's more or less a part of a diversified portfolio. Looking at opportunity costs, and this is another important concept to consider when you're looking at putting some of your assets into physical metal, is the opportunity cost of other cash positions. And with interest rates hovering around zero, with real interest rates factoring in inflation being at zero, if not in some cases a negative interest rate, and you can see by this graph, if you can't see those numbers, it actually goes over to 2011, but since 2011, rates in this country haven't moved any. So as you can see, if you factor in inflation right now and you put your funds, say, in a money market account or a CD, chances are you're actually losing purchasing power by doing that. So the opportunity cost of holding gold versus a CD is something to consider when you're looking at choosing a cash position for your retirement plan. So just a quick recap, and I'll pull up the questions here in a minute. Just a quick recap of some of the things that we've covered, and feel free to ask any questions about any of these topics. We discussed the IRS guidelines as to which type of coins or bars can be held inside of an IRA and the rules that oversee that. We've also talked about the 3 different parties that are involved when you place a physical metal order. Once again, different than, say, an ETF or a mutual fund, you are actually buying physical coins or bars, so you are going to have to choose the dealer from whom you're buying those products from and the storage facility that you're housing them at. We also talked about the steps of getting the IRA established, funding the IRA, and then going through the purchasing process and understanding the roles that these 3 different parties play throughout that purchasing process. And then we also touched on some of the historical benefits of gold in terms of diversifying and protecting your wealth. A couple questions that come up. Yes, this will be saved on our website. It will be on our Learning Center, and we will be doing some other webinars in the next couple of months on some of the different options outside of purchasing through a domestic dealer of your choice. But yes, this educational material will be housed on our website under our Learning Center. Just give me a second. I'm going to read through some of these questions, but if you have any yourself, feel free to type them into the chat box in the bottom left corner of your screen. Question came up in terms of what are the risks, not market risks, of holding your assets in a facility, worst case economical collapse, things along those lines. You have to consider at the end of the day, because we're dealing with retirement plans and the way the tax code is written, unlike buying metal personally and storing it wherever you want to store it, safety deposit box, your backyard, under your bed, you certainly can do that on personal investments. But when we're talking about a retirement plan, because this is a tax-deferred account and there has to be that middleman, that custodian or administrator basically reporting any distributions and contributions for tax purposes, those assets have to be under that custodian's control. They'll have to know at any given time that you have taken possession of those coins or have requested a distribution. So the assets must be stored by a third-party regulated facility. Now, of course, from a doomsday situation, what happens if that facility is attacked or economical collapse? The best we can do in terms of insurance are for those type of incidents, but at the same time, that is one of the issues you have to consider when you're buying inside of an IRA, is that those assets are going to will have to be stored at one of these facilities for safekeeping. Now, once again, if you ever catch wind or you're concerned about what's going on in the economy, you can request possession of these metals at any time. We can either ship them to you or you actually can go to the facility and pick them up. Just keep in mind that as soon as you take possession of them, we will have to report that as a distribution, which is not the end of the world in a lot of situations, but that is the protocol. A question came up in terms of selling the metal. Yes, you certainly can sell the metal. You do not have to take physical possession of your IRA-owned metal. You certainly can sell those back to any dealer of your choice at any time and then take a cash distribution. Or if you're interested in diversifying, say, 20% of your portfolio into physical metal at this point, but as things stabilize or other opportunities come up, you always can sell a portion of those assets and we can always transfer them back to another IRA. It's important to understand that IRAs are portable. That means you can move funds between IRAs as often as you like. That is not a reportable event and it's not a taxable event. It's just moving your IRA assets from one custodian to another. And for the most part, that's done to diversify. Certain custodians specialize in securities and brokerage accounts. Some custodians specialize in tangible assets. Very few custodians have a full spectrum of all those assets just because of the administrative burden that comes along with some of these assets. So yes, you can always sell your assets and either transfer them back to another custodian, or you can sell the assets and take a cash distribution. A question came up regarding required minimum distributions, and that's a very good question. Once you reach the age of 70 and a half, you are going to be required to take a required minimum distribution, or an RMD, each year. Your RMD is based on your age, and you can take possession of the assets. So RMDs do not have to be taken in cash form. So if you have a $50,000 Entrust IRA and you're 75 years old and your required minimum distribution this year is $4,000, that means you do have to withdraw at least $4,000 from this retirement plan sometime this tax year. It does not have to be in cash form. It can be in physical form. So if you wanted to take 5 gold coins to meet your RMD, you can let us know at what point in time you want us to ship those to you. As long as it's done in the tax year that is the RMD falls under, you will have satisfied that required minimum distribution. So the answer is yes, you always can take possession of the metal to meet your required minimum distribution. A question came up stating that a client is already an Entrust client, has other assets with Entrust, and wants to know if they need to set up a second account to diversify into physical metal. You do not have to do that. Within your Entrust account, you can hold different types of assets that we administer. In some cases, clients do set up a second account. The main reason for that is to track the fees. It may be easier for you to see how we charge our fees, because our fees, once again, are based on the asset that we're administering. So for example, with precious metals, it's a flat fee of $150 a year. If you also own a rental property down in Florida, that would carry an additional fee of $295 a year per property. So sometimes clients like to have those separate out to 2 separate Entrust accounts so they can track the fees and the income coming in and out. So the answer is yes, you can either keep it under one Entrust account, or you can set up a second Entrust account, and those 2 accounts can be linked together for your online access. So for all practical purposes, it would be one account. It's just sub-accounted for under 2 account numbers if it's easier for you to track that way. So either or are options. Questions came up about self-directed IRAs that involve a LLC. That's a pretty complex topic, and anyone that has questions on that, feel free to give us a call. We could hold our own webinar just on that concept. The concept of an LLC, which I assume we're referring to either a single member LLC or an LLC that is owned by the IRA. What you have to keep in mind there is that the IRS has already deemed LLCs, or we already know this, LLCs are pass-through entities. So the fact that you've created a shell that your IRA is the owner of, because it's a pass-through entity, the IRA is still the owner of the assets. It's just being housed under a pass-through entity called an LLC. So whatever the LLC does, assuming that it's majority owned by your retirement plan, it's still going to have to follow the same rules that an IRA would directly. So if an IRA is not allowed to buy a rental property and rent it out to your son, setting up an LLC to have the LLC buy the property so that you can rent it out to your son doesn't really hold any water because it's being viewed as a pass-through entity. So if you do set up one of these LLCs and you have a CPA or an attorney overseeing it for you, they should know those rules, but keep in mind that anything that majority owned, well, I should say this, if the LLC is majority owned by your IRA, that LLC is going to have to follow the exact same rules that the IRA would directly. So if we're talking about precious metals and metals are viewed as a collectible, unless they meet the purity level and are in the possession of the custodian. If both of those pre-qualifiers are not met, you can make an argument that that is not a allowable investment. That's not a place for Entrust to make that call, but for the most part, understanding these LLCs and what role they play is important before you get involved in them. Let's see here. A question came up about the 60-day grace period of taking possession. That's another good question, and if you've been following the news, there was a recent court case that provided further guidance. It looks like, in terms of what the court case is stating, is that these distributions from IRAs, and what we're talking about here is taking a distribution from your IRA, you have 60 days, you have a 60-day grace period to return those funds in kind back to the same retirement plan or another qualified retirement plan. That's called a indirect rollover. So if you take possession of the gold, you do, or any type of IRA asset, you do have a 60-day window to return that before it becomes a taxable event. It's still going to be a reportable event on Form 1099-R that you took possession of these funds, but if it's returned in 60 days, the IRS is going to receive an offsetting Form 5498 that says the assets were distributed but were also returned. What the recent court case is stating is that you are only allowed one of those rollovers every 12 months. So just keep that in mind. If you're taking a distribution from an IRA, then you decide, you know what, I don't want these metals, I decided I want to get them back into my IRA, you can do that once every 12 months. If you do it again in that 12-month period, you're most likely not going to be able to return those metals. It's just going to be a taxable distribution. Now, with that said, this recent court case has caused a little bit of concern because it kind of goes against what we were initially told, or in publication 590 outlines. But the thing to keep in mind is, yes, you can take possession of the metal, and if you opt to change your mind within that 60 days, you can return the metal, but you're only allowed to do that once every 12 months. A question about, I only have gold bars. If I want to take a distribution less than the full bar, what would be the process? In that case, we obviously wouldn't have the ability to do anything with the bar in terms of breaking it up. You can either take the full bar, or more realistically, if you wanted, you could swap out that one larger bar for, say, 10 smaller bars. So if it's a 100-ounce silver bar and you decide you'd rather swap that out for 10 10-ounce bars and take possession of 2 of those 10-ounce bars, that's referred to as a swap. You would have to do that through a dealer of your choice. They'll basically buy back your larger bar in exchange for 10 smaller bars. Most dealers don't charge a very large commission to do a swap, and if it's with the dealer that you initially purchased through, in some cases they may not charge you anything. It'll just be a swap from one product to another. This will then allow you to start taking distribution in smaller denominations. To be honest with you, that is one of the main reasons we see, particularly with gold, very few clients buy anything larger than a 1-ounce bar or coin for that reason. If you have a 10-ounce bar, you may get a better price when you purchase it through a dealer, but if your goal is to take 2 ounces every year as a distribution, holding a 10-ounce bar won't help you accomplish that. So keep that in mind when you place your order, keeping in mind what your ultimate goal is with this retirement plan. If your goal is to eventually distribute assets over time, holding in smaller denominations will probably be in your best interest. Question came up. This is not really for us to determine, but it's a fair question to present. In the event of currency devaluation, can the metal be redeemed for currency other than the dollar that you purchase with? That's not a question for Entrust, but that is a fair question to ask. If you own physical metal and something happens to the currency that you're in, the concept of metal is that it is a global commodity. So regardless of if you need to sell it into a different currency or if you need to sell it to a dealer that's offshore, the concept behind holding physical metal is that if something happened or there was a devaluation of the currency, you would be able to protect your wealth and then be able to exchange your gold for either a foreign currency or a foreign asset. That looks to be all the questions. A couple repeats in here, so hopefully I addressed the other questions that were on here. If not, like I said, we're coming up on our hour time frame here. This will be saved on our website under our Learning Center, but more importantly, if you have any questions, you are always welcome to contact our dedicated Precious Metals Service Center. My name is Ryan Griffiths. I oversee the department, but anyone on our team will be able to answer any questions you have, whether it's a basic question or a more complex question. Just keep in mind, we will, for the most part, provide the education side of stuff, and we do not get into the advising side of what coins you should buy, if you should buy coins, where you should store them. We can give you the best information we have available from an education standpoint, but ultimately it's going to be your responsibility to purchase from whom you like and store where you like. I want to thank everyone for attending. If you have any questions, don't hesitate to call us. I'll leave our contact information up for a little bit. But once again, thank you, and I wish everybody a great day.
Thank you. Please stand by.